A low credit score can quietly make your life much more expensive. It affects your ability to get approved for loans, rent apartments, finance a car, or even qualify for better credit cards. And when your score is low, lenders see you as risky. That means higher interest rates, stricter approvals, and fewer financial opportunities. But here's the good news: your credit score is not permanent. It's actually something you can improve, often faster than most people realize. A few years ago, I checked my credit score and didn't like what I saw. It wasn't terrible, but it definitely wasn't good either. And the frustrating part was that I didn't fully understand why. I paid some of my bills, I had a credit card, but my score still wasn't improving. So I decided to learn how credit scores really work. And what I discovered surprised me. Your credit score isn't random. It's based on a few key behaviors that credit bureaus track. Once you understand those behaviors, improving your score becomes much easier. In fact, most improvements come down to 3 simple steps. Step number 1. Always pay your bills on time. This is the single most important factor affecting your credit score. Payment history typically makes up the largest portion of your credit score calculation. Even one late payment can damage your score, but consistent on-time payments send a strong signal to lenders that you're reliable. If remembering due dates is difficult, automation can help. Setting up automatic payments for at least the minimum amount due can prevent missed payments. Because when it comes to credit scores, consistency matters far more than perfection. Many experts recommend keeping utilization below 30% and even lower if possible. That means if your credit card limit is $1,000, your balance should ideally stay under $300. If your balances are high, paying them down can improve your score surprisingly quickly. In some cases, people see noticeable improvements within a few months. Another helpful trick is making payments multiple times during the month instead of waiting for the statement due date. This keeps your reported balance lower. Step number 3. Avoid opening too many new accounts at once. Every time you apply for credit, lenders perform a hard inquiry on your credit report. One inquiry isn't a big deal, but several applications in a short period can signal risk to lenders. It can make it look like you're desperately seeking credit. Spacing out credit applications helps protect your score, and when you do open new accounts, make sure they actually fit your financial strategy. Now, there's another factor many people underestimate: time. Credit scores reward long-term responsible behavior. The longer your credit history, the stronger your score becomes. That's why keeping older credit accounts open can actually help your credit profile, even if you don't use them often. But the most important thing to understand is this: improving your credit score doesn't require complicated strategies. It requires consistent financial behavior. Pay bills on time, keep credit card balances low, avoid unnecessary credit applications. So, if your credit score isn't where you want it to be right now, don't panic. It's not permanent. With the right habits, patience, and discipline, it can improve faster than you think. And once it does, it opens the door to much better financial opportunities.